Hi traders, welcome to my YouTube channel. So today we are going to talk about a very important topic. Okay, if you are not able to see the results in your trading journey even after following the stance methodology religiously, then this may be the reason for that. Watch this entire video to understand why you should not trade stance strategy blindly and how you can improve your results in coming days. This will change your trading results to a great extent. So back in 2020, when I started trading during COVID times, I also had the aha moments when I read the book for the first time. So I was awestruck by the simplicity that Stan explains in his book, and I thought that I am going to make millions by trading that. Also, initially when I started to trade in Stan's strategy, I found that it was good and I started to get results. Then later in 2022 or early 2022, when the market started correcting, and even before that, I started to see that the results were inconsistent and I am not going anywhere. I made some of brilliant trades later only to lose later. Okay, so I reread the book and backtested, and it was then I came to the real aha moment. Okay, so in this video we are going to discuss about that, what aha moment I felt, everything and all. You will be learning in this video. At the end of this video you will be learning why the stance strategy fails in first place. Okay, and I will also be talking about when stance strategy works the best and which market cycle is the best for trading stance strategy. Also, I will be sharing my experience and tips along with the chart examples in real time. Real time means it's not the current charts, but anyhow these charts are mostly in 2020, 2021, 22, those time range. Okay, that will help you to understand what I am really talking about in this video. Wherever you are from, you can be from anywhere, any part of the world. I talk mostly about Indian markets, but even if you are from US or any other country also, you can clearly understand these things, because what I am going to explain is only about price action. Okay, price action is universal, anybody can apply it. Just stick to the end of the video to see whether this is useful, and I can assure you that it will be an eye-opener for you. Okay, so let's start. Before going to the video, I would like to tell, if you are a beginner or if you are first coming to my YouTube channel, I already made 2 good videos on Stan Weinstein trading strategy. I would recommend to watch those videos first to understand the entire essence of this video. Without watching those videos, if you are very new to Stan Weinstein trading strategy, this video might not be that much useful and you will be left confused. So I would recommend you to watch those videos. So if you had seen Stan's interviews or if you had read his book, you would understand that Stan claims a win rate of around 70 to 80%. This is quite high, because even legendary traders like Mark Minervini or David Ryan also claims a winning rate of around 30 to 40% or at the max 50%. Okay, so but Stan always claims 70 to 80% win rate. Is this even true, or does Stan hides any secret? Actually no, because Stan doesn't hide any secret. Because first let me see what is his approach. He has an approach of forest to tree approach. It means that he looks for the forest first, and then he goes for a good area in that forest, and then he selects the best tree in the forest. That is called forest to tree approach. So less emphasis of this is the reason for frequent failures when we start trading. Okay, so this is the picture. What happens is the broader market is given the most weightage in Stan's strategy. If the broader market is not performing good, Stan is not going to trade. Okay, when the broader market is in a clear stage 2 only, Stan looks for the strongest sector. Once the sector is selected, once he identifies that the sector is in buying criteria, then he looks for strongest stock in that strongest sector. This is his entire approach. This is his philosophy. This is his trading philosophy. The philosophy is very simple. Okay, so Stan follows broader market. That's how he increases his win rate. He trades only when the odds are on his side, and he don't trade when the market turns down or in a clear stage 4 stage or stage 3. He doesn't trade. It is just simple as that. Okay, it is very difficult for us as a new beginner to understand this, but as this video progress I will explain with chart examples so that you can understand what I am talking about. So how to do that? Just follow the stocks with charts that align with the broader market. So this is the first step. The first step is to look into the stocks when the broader market, say Nifty 50, Nifty 500 or S&P 500, is in stage 1 or after a strong correction or even after a crash. This is the crucial time when you have to look for stocks. These are the best time to hunt stock. This is the best time to hunt stock, guys. Bear market is the best time to look out for strong stocks. It is your duty when the bear market comes. Okay, you should not be fearful. You should trust the process and look out for strong stocks. The news will be bad. Everyone will be talking about another crash or the market going to go down further, but this is the best time to look for strong stock, guys. This is this time. Okay, so when the market is in a stage 1 correction, that is consolidation zone, or it is recovering slowly from its recent crash, look for the stocks that is in stage 3 after a strong stage 2 move. Okay, you may be confused that why I am saying stage 3, because Stan always advises stocks that trades from stage 1 to stage 2, but wait, I will explain with chart examples. And these kind of stocks I call it as grade A. If you had seen my previous video, I would have explained 3 grades of setup. One is grade A, B and C. A and B is tradable. A is the best, B is tradable, but C should be avoided. And you also should look for stocks in stage 1, that is grade B. Okay, stage 1 is after a down move the stock goes into consolidation, that is stage 1, while stage 3 is the stock has already gone into stage 2, then it has gone into a small consolidation zone, that is stage 3. Instead of breaking down into stage 4, the stock again rises up into a new high, that is stage 3 stock getting turned again into stage 2, that I call as grade A. So the beginning, this is the beginning. Okay, this is what I was talking about. See, this is broader market Nifty 50. The bottom happened in March 2020. Okay, the bottom happened. The stock market went into a crash during the COVID time, and then it bottomed out on around March 2020, and then it staged a pullback recovery. Okay, it came above the 30-week moving average. The blue line you are seeing is 30-week moving average. It came above the 30-week moving average during this zone, and it was around July 2020, and then it broke into a all-time high around November 2020. So guys, tell me which is the time zone you should be looking for strongest stock. This zone is the time zone. Okay, the moment the stock market consolidates, the moment the stock market starts to recover, consolidates, breaks into an above the 30-week moving average after going down, is the time when you should be looking for. And at the max you can look for stocks till it reaches the all-time high. By this time, when the market reaches the all-time high, you should already be in full position, and your all the positions should be filled, and you should not be looking for any more new opportunities when the market has hit all-time high. It means that you should have taken all the positions by then. Okay, so coming to an example, this is a IT stock, Infi or Infosys. You can see when the broader market started to move above the 30-week moving average, this stock entered into all-time high zone at the same time. You can see this is a grade A stock. Why? It is a strong stage 2 move. The stock went into a stage 3. Instead of breaking down and going to stage 4, the stock broke out again into an all-time high zone. This is the strongest sign. This is a very positive sign, and the breakout happened exactly on 13th July 2020 with rising volume and RS in positive. This is triple confirmation pattern. The price breaks into new high, volume increase, and RS is also in positive zone. This is a comparative chart showing both the Nifty 50 and Infosys. You can see when this broader market started to come up above the 30-week moving average in July 13, 2020, it is almost 12% below the all-time high zone. This is the all-time high zone. The stock is 12% around below it, while this stock on the same day has broken into all-time high. This is a perfect example of strength, pure price action in play. You should never miss this stock. You should believe the process. Believe me, the news will be very bad in this zone. Many people will be talking about the stock market crashing again, going into a new low, but you have to believe the process. If the process goes wrong, don't worry, your stop loss should be in place if it goes wrong. Okay. Another example of grade A stock, this is LTI Mindtree. The stock exactly broke into all-time high. This is also a grade A structure. Why grade A? Because the strong stage 2, then the stock goes into consolidation for quite some time and then breaks into new high on July 6th. So even before the Infosys, this stock has broken out, right? The Infosys broke into all-time high on July 13th. Before that itself, this stock has broken into all-time high. You can see the increasing volume. This volume seems to be diminished because the subsequent weeks showed tremendous volume increase, but if you zoom in and see in the chart, you can see the volume spikes here, and the orders has already been positive for quite few weeks before the breakout. From that zone, it has almost went to 259% in a strong stage 2 structure. Okay, so another example of where you can get into the stock stronger stock is this Emphasis, but this structure is quite little different from this structure. Why? Because this structure went into stage 3 and then directly went into stage 2, while this structure is in stage 2 and then goes gradually into stage 4 and then stages a consolidation and then breaks out, not into a all-time high zone but well below the all-time high, right? But this is a valid breakout. You can see the price breaking out, you can see the volume spike, you can see the RS rising into positive zone here. So this is grade B according to me. This grading are not given by Stan. This is the way I had graded the stocks based on their strength, how it breaks and where it breaks. Okay, so the stock breaking into all-time high zone are grade A. The stocks that are breaking a little below the all-time high zone but still showing good strength are grade B. These are the two structures you should be focusing on when trading the Stan structure. Never trade poor structures, which I had explained in my previous video. Okay, the Emphasis, after breaking out, it has given a tremendous return of 221% in the next 1 year or so. And this is a very important point. Now the stock market has broken, and it has means the broader market has broken into above the 30-week moving average, and it has started running. Okay, so as the stock market matures, as the bull market matures, more and more participants come into it, and then you can, when the bull market is in mid-range, as the trend matures, you can see these kind of setups more, where the stock that has gone into deep correction gets into stage 2. Okay, weak stocks get stronger as the bull market matures. You can see this is a Vedanta. This is in metal sector, related to metal sector, mining industry. You can see this stock turned into stage 2 exactly in December 2020, late December 2020. You can see the stock has gone into a long period of slumber and then formed a consolidation zone and then broken out. Again you can see the volume, again you can see the RS. This is a comparison of Nifty 50 and the same stock Vedanta. You can see when this Vedanta broke out from his stage 1 to stage 2 in late December 2020, the market is already well above its all-time high zone. The market has bottomed out. It has broken a 30-week moving average. It has broken above the all-time high zone. Now it is trading way above its all-time high zone. Can you see this? So we are already in a confirmed bull market. More and more participant comes, so even the some of the weaker stocks get stronger and starts to move. Okay, this stock you should avoid, because you should have already positioned yourself in this zone, not here. Don't look for stocks like this. Even though this stock was a hit, you will see more volatility, and you will see more frequent failures if you are trading in this zone when the broader market is in an all-time high already. I hope this point is clear. If you are not clear, kindly watch the video, pause it, and then watch it again. You will understand what I am talking about. So then what happens? The bull market completely matures. Everybody enters into the market with a high hope, right? So this is the time the laggards will also start showing strength. These are the poorest stocks. These are laggards. This breaks into stage 2 when the broader market is in the verge of correction. Okay, so sorry for the spelling mistake here. It is verge of correction. See, this is a sector. The sector is nothing but Nifty Media. This is the COVID correction. After the COVID correction, after the strong stage 4, it formed a small consolidation and then it broke out in September 2021. Remember, the market has went into all-time high zone in around September 2020. It is this sector is breaking out after almost a year. Okay. But what happened later? The stock went out. The RS was also positive, but the stock went out a little, and then it came down. Even after a year, the stock went nowhere. Okay, this is not because this structure is poor. The structure wise everything is correct. RS is positive, big candles, price action confirming, 30-week moving average rising. Everything is right. But what was different? The broader market is in the period of correction, is on the verge of correction. Even it is a matured bull market. I will show you a comparison video. You can see in September 2021 the broader market is in all-time high zone. It has broken and has come a long way. Now there is some time, there's very little time for this broader market to move higher, right? Because most of the move has happened already. If you are taking a stand structure here, then your risk reward will be skewed. You are bound to get shaken out. You are bound to get disappointed a lot. Okay, correction is due actually at this time. So this is another stock, Network 18. This stock is a media stock. The sector I showed lastly. You can see here in July 2021 and November 2021 the stock started to break out. This breakout is quite good, right? See, the price is confirming, moving average is rising a little, and the volume is good, and the R is also getting to positive zone. But what happens once the breakout happens? In fails miserably, then again the stock breaks out. You can see the price is good, the volumes are coming in, or again becomes positive. But what happens later? Nothing. The stock fails you, right? So what is the concept? The concept is very simple. As the broader market goes into a full-fledged bull market, the frustrated retailers who miss the entire trend jumps into the picture. They buy anything that is in news flow. They buy anything recommended by their friends, relatives, and they bring more money. The fraud keeps on building more and more. So this is the perfect time for correction, when every retailer, when every person you talk, when every party or every group discussions is filled with stock market, investment, returns, then that is the perfect time that the market is going to correct. This has not changed even after 100 years. Okay, Stan wrote this book around 1970s, but nothing has changed even after almost 50 years has gone by. I think 40 or 50 odd years, but nothing has changed. The emotions remains the same. So what is my advice? Never look for new opportunity when the trend is matured. Always wait, otherwise you will definitely fail. Okay, so what are the key takeaways in this video? What to do, what you can do: start to hunt for stocks when crash has happened or a meaningful correction has happened. By meaningful correction I mean at least don't move of a broader market 20 to 25%, 15 to 20%. That will be a good starting point to hunt for stocks. When that happens, look for stocks that breaks into stage 2 from stage 3. This is very important because from stage 3 only it can break into all-time high zones. If you are looking for stocks, if you are looking for only those stocks that breaks from stage 1 to stage 2, your winning proportion will be little skewed because the stronger stocks always reaches the all-time high zone before the broader market does. That is what I had learned in my trading experience. And get earlier into these trades. Okay, perfect time is 2 to 3 months once the broader market starts stabilizing. It doesn't mean that you should always enter too early, because don't you can start with small positions and then you should go into full swing once the market stabilizes within 2 to 3 months. Okay, hold the stocks till the trend matures enough. Don't sell the stock as soon as the trend as soon as you get some 15%, 20% or 10% move, because that's not going to help you. You waited for a crash, you looked for stocks, you had selected beautiful stocks. That stocks are now performing, allow them to perform. Don't call off the show very soon unless you are a swing trader. Don't do that. Okay, if you are a swing trader, you have to look for multiple opportunities in those zones. When you are a positional trader, that is the beauty of Stan Weinstein, because he selects a weekly time frame where the price action takes long time, where the structure takes much more time to build up to show beautiful stage 2 moves. It takes time. Okay, allow the stock to perform, hold it till the trend matures enough and you start to see that the broader market is showing some volatility, or you feel that the market is going to correct, or the broader market starts correcting more than 10-15%, then you can think of exiting from your stock. Also at that time your stock will also be showing perfect trend to exit. Your stop loss will be hit if you are sticking to the rules of Stan Weinstein well before the broader market. Okay, so never enter late stages of bull market. Never enter when the bull market is in late stages, when the trend has matured completely. Okay, so this is the key takeaway you should understand. If you follow this one setup, okay, if you follow this one thing, I can assure you that you can make very good fortune from the stock market. Okay, so in next video I will be talking about how to use Stan Weinstein's strategy in smaller time frames. By smaller time frames I don't mean intraday time frames like 15 minutes or 30 minutes candle. I mean in daily time frame. That is the smaller time frame I trade. Okay, I don't go below that because it becomes very difficult for me. I can't follow the market daily because I am a working professional. I can't look into charts all the time, and I don't think that is necessary to make good money in stock market. And I will also be discussing in my next video what modification you can do in Stan's setup to meet the current trends. As the volatility has become too high, even Stan has said some modifications in his strategy. Those things will also be discussed in the coming videos. So hopefully I think you like this video. If you are satisfied with the video, kindly like, share and subscribe. Also I would like you all to comment. Okay, you can share your thoughts with me. I will definitely reply to you individually, and I hope this is helpful, guys. Thank you so much for listening so patiently. We'll see you in next video. Thanks.